Everybody. Hey, how's it going? Good morning. And I tell you what, look at this right here. Look at that. Almost to the target. Look how fast this is going. Holy guacamole right there. Look at that, baby. Look at that. Would you look at that right there? I tell you what, it took a while for the market to tell me which way we're going to go, but right there it is. Getting there on a hustle quite quickly. Watch out for the reaction, though. We may run out of airspeed right up here. And I just wanted to start off right there. And then we have the consumer delinquencies rising for several months now. Check this out right here. Look at this. This is the makings of a problem. Look, ever since 2010, we topped out back here, 2010. That's like 14 years ago. We've been on a decline with consumer delinquencies. You see what happened last time? We kind of arced the corner here and ramped it up. So we haven't been on a rise not a real rise consistently in consumer delinquencies since back here in 2007, excuse me, 2006, 2007. Now we're doing it right here. Consistently. Consistent rise right there. Is that indicative of a problem? Quite possibly. Quite possibly. This is, you can see the red is severely derogatory. That means, that loan's about to get written off. The orange, which is very hard to see, is 120 days late. It's not a big component right now. The yellow, 90 days late. The blue, 60 days late and 30 days late. And 30 days is growing a little bit, but those longer term delinquencies are, what really gets it, really causes problems. So there you go. There you go. And that's by Equifax right there. All right. This is not like a government report. This is Equifax data right here, kind of showing, your credit gets reported pretty consistently to the big three, Experian, Equifax, and whatever the other one is. And I don't know. I mean, another canary. I keep pointing them out. Yet another canary right there. And it's just keep on finding canaries. And eventually one of these is going to be the one that ends us, ends us, if you will. So anyway, which one is it going to be? Here's another one, though. Look at this. For the first time, well, that was kind of a net inflow day. But right here, we had all of the spot ETFs taking inflows yesterday for the first time since the spot ETFs came on the market. That includes Grayscale. Grayscale's seen basically net outflows for quite a bit. The big winners yesterday were Bitwise and Fidelity. Having those big chunks flow in there. I saw news that somebody bought there was a hedge fund bought $2 billion worth of Bitcoin exposure yesterday out of one of these spot ETFs, or maybe it was two of them. Maybe it was Bitwise and Fidelity, but we saw $2 billion of inflow into that. And I'm sure that they probably did it slow. It was probably back here and they announced they finished it up or something like that. But it just takes a little spark to create the movement up in Bitcoin. And we did see Bitcoin come up to that key level at 66,000 yesterday. That right up to the level and just kind of stopped right there. I mean, there's a reason why I say their support, their resistance. And I just get lucky on these numbers, these levels all the freaking time, So anyway, welcome to the show, everybody. If you want to chat with me, like all the people saying, hey, good morning, click the button over here. Let me click the button over here. Be a be a subscriber. The button right down in here. A few seconds later, you can chat on the live stream while I'm live. If I'm no longer live, you'll have to leave a comment down below. Couldn't think of the word for comment. Leave a comment down below, and I'll do my best to get back to you when I can. And thanks for coming. Thanks for being a part of this. Make sure you give me likes on the video and give me some feedback on what you like, what you don't like as I go along. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may never get another one of these predictions right again. This presentation is intended to be informational, educational, fun, and entertaining. It is not a recommendation to be buying or selling any financial instrument. No stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. If you desire personal financial advice, which is not what I do, you got to hire and consult a financial advisor. And welcome to the show. Today, we have yet another day in a long sequence of days. Today is Thursday. So we come in here, we're looking at the unemployment claims, the building permits, the Philly Fed, all hitting this morning and not really causing much of anything. Not much of anything, all right? We've got Fed Bar speaking at 10 a.m. and tomorrow, another pretty benign day. So that kind of wraps up this week. Get a few more earnings popping out there, but not a lot this week. Next week, looking at it right here, we see some bank holidays on Monday. So that's going to be probably a little bit of a lackluster day, just because the rest of the world's kind of closed. You have Canada closed, Europe, Germany's closed, France closed, Swiss closed. So we're seeing a lot of Europe money closed on Monday next week. Then we have Canadian CPI, which is not really a big thing for us. We've got a bunch of Fed members coming out and speaking both on Monday and Tuesday next week. Wednesday, we get those meeting minutes, which a lot of people freak out, but we basically already know that what they said. We got hotter than expected inflation. They're not sure they can cut rates. Big freaking deal. All right. I don't think there's going to be much surprises there. I mean, the market may the algos, the algorithms, when they get that report, may react a little bit at 2 p.m. on Wednesday, but it's not an FOMC day. All right. This is not the same thing as an FOMC day. Minutes are just minutes. Can cause a little brief volatility in the market. It could be the excuse that's used if we start down, if we hit the 5350 upside. And be careful. Be careful. All right. Thursday, just more of the same stuff we usually get. Unemployment claims, flash manufacturing, flash services. And then Friday, we get that revised consumer sentiment. We get those about every week, it seems like. Core durable goods. And then we're on to the holiday weekend, that 3-day weekend right there. Monday, the 27th, Memorial Day, right there. Banks are closed in the United States. The market's closed in the United States. And I'll do a crypto special that day. So other than that, we don't have a lot cooking here. We get some GDP right there on the 30th, right before the end of the month. And then we'll be into June pretty much. We got some core PCE right on the last day, the 31st, which means the FOMC meeting probably coming up right there in June, right after that. So, Let's see what we got. I don't remember which day. Let's see, ISM manufacturing and not the first week in June. Let's see, when's the next FOMC? I could just go look it up on there we go. Second week in June, new FOMC. I don't think they're cutting rates. They may raise rates depending on what happens here. Look at that. We get another CPI right on the same day as the FOMC. Isn't that interesting? They're going to cram another CPI reading right down in front of the... Oh, that's interesting right there. And they flipped them back. So the CPI read is before the PPI, but it's on the same day as the FOMC. This will be interesting. That'll be interesting. Well. I don't know. We'll see what happens. That could be some chaos. All right, that's economic news wise. And if you want this, it's just forexfactory.com. You click on calendar and it kind of lists all the, it's one of the best lists of economic news events out there that I know of. And it's designed around currency traders. So it is international. So you see a lot of stuff that normally you wouldn't even hear of if you're following mainstream media in the United States. And it's all right here. So it's a handy dandy place. And, any of these, you want to see like how's CPI been running, you just click on them and you can get kind of a long-term chart of what the numbers have been. Now, why do I kind of focus on global events like this? Economic news wise, the market is 98% correlated to global liquidity. That's global central bank liquidity. So the more central banks are printing money, the market's going up. Like that's the long and the short of it. 98% correlated. So when they're pulling their horns back in, when reducing money supply, we usually get some pullbacks in the market. So it's 98% correlated. So you may be like, well, the money supply charts are showing that a contraction is going on right now, but the market's going higher. But actually, they're increasing liquidity overall through extraordinary measures, as they call it. And it's all pay no attention to the man behind the curtain situation, where they, it's like we're doing this thing in right here where everybody can see it, but over here we're actually still pumping money into the market, into the money into the economy. It's so stupid lately, and the whole world's going to start. It's basically like I was talking about yesterday, how USSR blew apart by believing its own narrative back in the 90s, and the whole world is going to go down this toilet. And I think it's going to be the Greater Depression, basically. That's probably what we'll call it in hindsight. I've been saying it for a few years now that we'll probably get the Greater Depression. It'll just be the Greater Depression because most of us alive, most of us here, I mean, there's probably a few of you, like, I know my grandma was around back then, but most of us don't remember. We weren't alive. We can't remember. So, it'll be a Greater Depression because we've never experienced anything like that. So we think it's worse than what we had before. That's just my 2 cents on it. And there's more people, so it's greater, right? Anyway, what's moving in the markets? Well, as I started off, warning, we're getting right near the target. We finally confirmed it. That's a breakout. That's a push higher. Watch out for the resistance right there. Now, can it go even higher? Sure, it can keep going higher. 5,500, possibly, maybe. There's lots of potential on the upside, but just be careful. Just be careful. That's the best thing I can offer at the moment. Is that this is not a bullish pattern, unfortunately, right here. It definitely makes me very, very nervous on what we did right here. So be careful out there. We may hit this and roll, and we may come up shy and roll, because these are zones. They're not definitive levels. It's more like a zone like this, and we're getting really dang close to the bottom of it. Now we could get overhyped and overexcited and go all the way up to the 54.67 area. So, and be careful. Be careful. We're already seeing ES be a little soft here. It really tried to do the breakout and the push higher. We may see it get that. Quite possible right there. NQ, definitely catching up. Potentially going to rally right up there to 19.2. Russell, the oddball out here. Not going higher. Oh, look at that. Google hit the target. Goog hit the target. Rio hit the target. SE closed out. MA. Oh, that's interesting. The first entry for... That's interesting. Interesting. All right. CO. Look at this reversal right here. Oh, my echo trades. There it goes. Look at that. Nice bounce off of support. Look, it extended all the way down. Lulu closing out. Look at that. It hit that 1272 right there. Classic move. Classic touch right there. Classic. right there yesterday, reversed hard. So this is probably going here next, back to 83. Once we get above that, probably going right up here to 90. We do have to get through this little intermediate zone right here. We got to get through the roadmap line. We have a pile of resistance on oil, but this is looking pretty strong. All right, going from 80 to 90. We could do that pretty short order. I mean, this could be up there in June, maybe July. Could go fast. I mean, we could be up there in a week or two, but I think we're probably gonna last a little longer than that. You know, a week or two puts us into June, but I'd probably go a little slower. I mean, look, this is kind of the trajectory rate right here, that kind of speed. So we go off of that, puts us, like I said, July right there. Not too shabby. So watch for that. That's going to put a hurting on everything. Oil has this habit of making inflation go really, really high. So watch out for that. We've already basically drained the strategic petroleum reserve, so it's not like there's gajillions of gallons of that to put out there and try to ease prices with. So I'd be very careful that inflation comes ripping back and puts a hurting on everybody. This one was interesting. Gold right here. Look at that. Right to the top of the orange box and stop. This morning, little push, little pull, little bit of chop. We'll have to go down to a smaller time frame. See what's been going on. Right there. We ramped right up there yesterday. Overnight, pushing a little higher right after the close. Then getting a pullback, probably come back to this 30-minute roadmap at the minimum. Looks like we already got close. Probably a 15-minute bounce. There it is, 15-minute bounce. So the next extension higher, potentially right up there, 24.10 on the small time frame. You see these little pullbacks and ebbs and flows. The market does that. I was explaining yesterday, it's all fractal in nature. And bigger time frame. We glanced right off of that 1272. Look at that. See that bigger time frame bounce right off the hourly, right to the 1272. Pull back. Can we get the extension? Possibly 24.14 on that time frame. And ultimately, we're probably heading on up to 2500 area right up here. Bitcoin. Oh, look at that. Right above the level. Like I said, it popped up to that level yesterday and just kind of parked there overnight. Just parked there, just kind of hanging out. Let's go look at the all-time history chart. Yeah, and just hanging out right there, consolidating. This is basically a breakout situation. It's got to do the more, it's got to break through more resistance levels, but this is already the first initial indication that we're probably on the path, all right? Probably on the path. Now, where does this leave us at this point? Well, pretty much bullish, all right? That's the initial sign. Now, it can still fail. It can always still fail. This first move up in the consolidation we did right there, that took, 1, 2, 3, 4 days to come up, another 4 days come down, a couple days to consolidate. Now we're pushing higher. That sets us up for a move right up to the prior high, right in there at that 72,000 price right there on Bitcoin. And if we get the extension, that puts us up to the 77,000 price that I've been kind of parroting for a little while. And we should probably pull this all the way down to the bottom at this point. And that actually eases it up to 78,000 right there. So somewhere in that zone, we're likely to top out and do a correction again, possibly retest this consolidation here. Now, Bitcoin has a habit of just going ripping and not retracing and retesting consolidations. So be careful. We may just blast off and go ripping on higher. Entirely possible. Entirely possible. Now, the biggest likely scenario, we kind of chop around here and mess around, possibly get up here and consolidate back for another few months. because usually it's 200 days after halving before we really get really spicy bullish. So are we running ahead of time this time, or are we going to fart around for the next 6 months? I don't know. Time will tell. Ethereum, on the other hand, still not looking nearly as spicy. This is still in a downtrend, still sitting right here. We have that spot ETF potential approval denial coming up on the 23rd. That's just a few short days away at this point. Like 5 or 6, and 4, 5, 6, 7. So next week, we'll see. Coming up quick and may result in a drop. Dollar. Bouncing off the roadmap line so far. If we get below it, you know the drill. We're probably going back down to my long-term target down here in the 90s. Down here. Down here. We've been working on this correction for a while. We're still in the midst of it. We peaked right here. First move down. Retrace. Second move down. Probably going to take us down here. Probably going to take us down there. So, all right. That's what we got. That's what we got for the dollar. Now, as for things that were actually moving this morning, Chubb, look at that. Chubb is popping on Berkshire Hathaway, taking a 2 billion, I think it was $2 billion investment, or no, maybe it's 2% investment. Put billions of dollars into this. And everybody wants to follow the big Warren Buffett. Follow the B. And that's right up to the resistance. So this may experience a pullback. I have to caution on following Warren Buffett. All right. Look at this right here. Let's zoom out. Another one that was announced. He's investing, pop, and retrace. He's investing more, pop, and retrace. He's investing more, pop, less effect, and retrace. He's investing more. And he's become pretty much one of the majority holders of this one right here. Turn off those. And it's gone nowhere. All right, his time frame is usually like 10, 15 years, not a trade. So if you're a trader and you're looking for catching a pop in the next couple of days, next couple of weeks, next couple of months, following somebody like Warren Buffett that's looking at 10 years, 15 years, 20-year investment, it's probably not your thing. All right. So be careful chasing this one. I think it's a limited benefit here. Now, could it just take off and run? Absolutely, it could. Absolutely. All right. And it's kind of funny, investing in property and casualty insurance. Geico is Warren Buffett's flagship insurance right there, if you didn't know. So, TSRI, nice pop, way up there. Don't even see the candle. It's popped up so high, but we're right in the midst of all those highs right there. I wouldn't mess with that. That looks very gnarly, and it's low liquidity, garbage kind of stuff. Walmart, nice pop there. Right up to, look at that. Beautiful. Beautiful extension on Walmart. Right up to the 1618. And we may, it's highly likely we're going to retrace off of that. Already getting a red candle. PANW. This one, look at this. This is interesting right here. I have 5 shares of this. 5 whole shares that I bought right back here. And 400 is basically the target. 405, I think, is where I have my order. Got to get above that resistance. We have that giant gap down right here. We gapped from right there to right there on the last earnings. And we've got earnings coming up in 4 days, next Monday. After the close, is that enough to pop us, or are we going to drop it? It's unclear on the chart right now because we're still in the range. Like, look, we did that big gap down. We did this right here. This right here, this bounce right there. Right there. And we set a range. And we've stayed inside that range ever since. From that low to that high Look at that. We're just inside and we've left this gap of upside resistance right above us. What does that mean? The easier path is? The easier path is down at this point. Right there. Because we've got so much upside resistance built up. Now, is it possible that we can get up here by Monday and then launch off? Absolutely. Is it possible that we just gap right back up here? Possibly. Absolutely. We could just gap way up there and be up there after earnings on Tuesday. You know, when we open, Monday, earnings on Monday, open on Tuesday, we could be right up here. Entirely possible. Anything in the market's possible. It's just, what's the most likely path? Now, this is a watermelon seed squeeze, and not my favorite pattern whatsoever. It's just nasty. Don't like that. That's an unreliable pattern. You can pop, it can drop. I don't like them. Don't like them at all. Here's this one. I kind of speculated that we may get some accelerated up, and there we go, popping out of the top of this weird. What a weird channel, right? Look at that. It's like an exponential log channel. And the chart's already on logarithmic. So watch out for that to retrace at some point down here. Like last time we were at the daily roadmap line was November. Eventually we're going to run out of gas and it's going to retrace back down. Target dog. Target looks like it wants to come visit this support right here. Eventually consolidating right there, it wants to reach down. So while Walmart is popping, Target has been correcting a little bit. So that's, no opportunity for me on Target at this point. NTES consolidating at the roadmap line, no real opportunity. If you want the roadmap line, like I haven't really talked about it. If you want this orange line where I keep saying it's support and resistance, link is in the description down below. It's like $5 to get this thing with an easy button. And if that's too much for you, $5 too rough on you, no big deal. I have free videos in the history. Just go look for it's like my favorite indicator or something like that. That video, I give you the code. You can just type it right into TradingView. This is tradingview.com. This is what I use. It's a free charting platform. You can do all of this stuff I'm doing right here for free on TradingView. Now, if you want alerts, more than like one or two, they charge for that. But, hey, they know what you need. They know what a trader needs. The trader needs alerts. That looks like a brand new ticker. No information. ZTO popping, but now we're dropping. We're going to retrace that back down, it looks like. And yeah, gnarly. AMD trying to break out here. Can it do it? The resistance is all the way up here at 190. As long as we're below 190, odds are we're going down here. And if we can get above 190, that flips it around, going up to 256, possibly 300. So that's what we got. The long and the short on AMD. SDRL, Seadrill, sitting at the all-time highs. And let's see, the extension off of that, possibly 55, possibly 58 on the upside for next resistance. Dell, right up to the 1618 and stopped. Getting a little red retrace off of that. And it may need another one of these retraces this big. See, I did one right there, did one right there. May get another one right there, pull us back down to 126. Be careful on that one. Doesn't have to do it, but odds are it's going to do it. Like, that's just the way price moves. DE right here, tried for the breakout and slamming back down a little bit. We'll see what happens there. That's kind of been a choppy sideways, not really making progress for 3 years. Yeah, 3 years. Whew. Usually when CAT is going higher, DE kind of flies parallel with it. CAT has been showing some expansion in the economy. People buying construction equipment, either in the U.S. or international. It doesn't, it's just kind of like worldwide. There's some expansion. Now, DE, you could argue, is more of a localized in the United States, but And you could say it's a little heavier in farm equipment, but on the same side, that's sideways. That's just choppy sideways for 3 years and not really indicating we're going on a trend. So be careful chasing this higher at this point. And, we could just keep chopping in the range. SMCI? Dun, dun, dun. What is the chat program to use for starters? What are you talking about? Chat program. Dun, dun, dun. I run a community in Discord, if that's what you're referring to. SMCI popping up to the resistance zone. Be careful. Watch for this to reject off of this orange box right here. If we reject, we could go down in a blaze of glory. The first support would be the roadmap line. Next support would be down here where we consolidated for months and months and months. All last summer into the fall, the second half of last year. And if we break out above that, possibly 1430 on the upside. Nice. Nice. Broke down. Ooh, below the roadmap line. That low, that high. Support is right in here. Right in there. Chart, not chat. TradingView. TradingView.com right here. I can't click on the logo for whatever reason. It's just TradingView.com. Just go to TradingView.com. Right here. TradingView. Right here. It's free. And you can just make an account and log in. Supercharts is what I use. It has all these screeners, all for free. If you want to buy an account, you can. They offer a few times a year. They offer like 70% off discounts. So there you go. Sorry, I saw chat instead of chart. Hey, Kimberly's here, my favorite subscriber. Favorite, bestest buddy in the whole world. Anyway, right there is the retrace. I'm trying to read chat right here and talk to you right here. Sorry I missed the chat chart thing. And retrace looks likely on GME. Rejecting that 618 breakout right there. And they're like, how do you know? Like, well, right there, look. That move down, that move up, rejecting. We can go lower. Doesn't have to go higher. Now, if we get a daily close up in here, that's definitive. At this point, we've got the resistance all the way up to the top of that candle. If we get a definitive daily green close up in there, we can be heading on up here to ridiculous, absolute ridiculous numbers. 150, 245, 314, 589. Absolutely ridiculous. Can it do it? Yeah, it can absolutely do it. All right, that's in the charts at this point. Now, we did, let's see, we did not yet get down to this support zone right there. We gapped up through it. It didn't exist before we topped out right there, but right there's the gap, and we may retrace that gap. Could come all the way down right there before the next leg happens on this thing. Now, just ignoring some of the bigger picture stuff I've already drawn, just focusing on what we've done the last few weeks here. This move up right to there, this move down. Let's just say it goes to the 618, an ideal place to come down to. Could put us, look at these numbers. These are all-time highs right here. 133, 220. Holy Batman. That's crazy numbers. All right. Absolutely ridiculous, crazy numbers, but that could ramp right up there. Right up there. That's a measured bounce. That's one of my favorite patterns. And if we were to do something like ramp all the way to 420, that'd be kind of funny. But if we did, likely to retrace back down, epic retrace back down to 100, and then get another extension even higher. Just, this is crazy right here. I mean, it's absolutely crazy, but Is it going to do it? I give it like less than 1% odds of actually doing that right now. But if it starts taking shape, if we get down in here and turn higher, watch out for those numbers up there. 100% serious, watch out. And my recommendation, for what it's worth, I don't recommend you do anything. I mean, if you desire personal financial advice, consider hiring and consult a financial advisor, right? I don't recommend it, not recommending anything. My recommendation, though, is to stay the frick away. All right? Probably lose money messing with this. Or get stuck in a position for a long time. AGCO. Break it down. This is not bullish. Not bullish. EDU. I'm going to have to go here in a minute. I do have another webinar coming up. I have a sales webinar coming up at 10 o'clock. And let me throw the link in the chat really quick before I forget. Dun, 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 dun. Throw it in the announcements channel if you're in there. And right here. Oop. Copy. And paste. Right here. Oh, looks like my Zoom logo not showing up. Right there you go. So EDU. And Tina, this is not a request show. That's Tuesdays at 5 p.m. I'm just going through what was popping and dropping pre-market and kind of looking for opportunities today. EDU, it fired off an entry, but getting the retrace. If we can get the continuation 106. CAMT, right up to the targets right there. That one's done for now. Probably get a retrace. SPIR, right down to the roadmap line. Beautiful. We're going to move back up through 1450. Looking for 23 on the upside. NVO, potential to keep chugging in the channel, but we may break out of that. And I don't even know what happened here. Why does this thing keep messing with my channels? I don't even understand. I don't even understand this at all. Keeps redrawing all my channels. It's not the split that happened back whenever. I don't know. NVO just going to keep chugging as long as GLP-1 drugs are going. NVO and Lilly probably going to keep printing money. CIVI chopping around. Bounced off the roadmap line. Did the little extension here. Right up to the 1272. Retracing. Probably going to come back down again. Cold. Ultra short natural gas is getting slammed as natural gas goes higher. How low can that one go? Well, it can go to 0. That's for sure. Probably down to 42 would be my next guess if natural gas is going to continue to be a little bullish. Baidu earnings were today. Beating on the top, beating on the bottom. Still getting slammed. Resistance off the roadmap line. I was hoping we could get above it. Hoping. Back down to the 618. If we can hold that zone right here. This 50, 618 zone, we can hold that, turn higher. It's just like I was talking about a second ago. On GME, can propel us much higher off these levels. And AWIN, just complete dumpster fire. Reverse split, 1 for 100. Dear gosh, man, don't mess with that. That's just going to cost you money. Oh, man. Whew. Likely path. The likely path is further decline on AWIN. Be careful out there. Be careful out there. The bias for the day. Bias for the day. And I've got a question for everybody here right at the end. But bias for the day is to go hunt that 5350 on S&P. Let's go hunt. Let's go hunting. 5340, 5350. Could we go on an extension even higher? Possibly, but just for today, maybe the next couple days, only expecting that right there. There you go. That's it. Now the question, what are your thoughts on Neapolitan ice cream? Was that even a good idea to put 3 flavors in one box? I mean, if you're unfamiliar, Neapolitan, it's got chocolate, vanilla, and strawberry all in one box. It used to be in a box, in a carton, whatever you want to call it. Ice cream, comes in a kind of a carton. Is Neapolitan ice cream even a great idea to mix 3 flavors in one container? I mean, I don't know why I thought of this morning. I was like, I want to ask my subscribers, what they think of that. What do they think about Neapolitan? Great idea? Not great idea. You can leave me a message here in the chat, or you can leave a comment down below. So thanks for coming today. Pop over Zoom, and I'll be there in a few minutes. All right. Thanks for coming, everybody. I'll see you later. Bye.